Hello, everyone. Happy Friday. Glad the week is over. Glad OpEx is over. So, how is everyone doing? Hope you had a good day trading and a good week. Let's just do a quick recap and take a look at what's coming up next week. That's going to be important. So, let's see. Hey, Patrick. Hey, Coco. Very light viewership today. Hey, Anissa. Thank you for tuning in. All right, we'll just get right down to it. So we had the Powell speech. I thought it was sort of dovish, but we'll wait for more data. It was Powell and Bernanke. I was not a Bernanke fan, so it was, oh well. Next week, let's just see. Because we had the rig count. Rig counts are dropping, by the way, too. So if you're an oil trader, keep that in mind. Starting off next week, we got 3 Fed speaks with Monday. 3 Fed speaks with Monday and then nothing. Next week is all backloaded. Tuesday, we got S&P services, composite, PMI, manufacturing. We got Richmond regional indices. So you got a little data, but not heavy. Wednesday is very light, very light. I mean, you got your crude numbers and some mortgage stuff, but very light. Going into Thursday and Friday next week, those are the big days. So besides Thursday, your initial and continuing jobless claims, we get the second estimate of the GDP growth rate for the prior quarter. So we're going to see about that. And we get the PCE prices for the prior quarter. Again, we had the first estimate the last time. And then we get Kansas City Feds, and we get pending home sales and a little Fed speak. But Friday is the big day. Friday is PCE Friday. So we get the main thing that the Fed watches, PCE. So we're going to see how that comes in on Friday. Then we got consumer sentiment. Also remember, and these are the final numbers. Remember last time when the shocking was the 5-year inflation expectations. So that was bouncing back up. You see it here on this. You see the little chart here. So this is not what the Fed wants to see. Okay? Rising consumer inflation expectation, because that could lead to inflation getting entrenched. Hey, Pep. So that's where we sit. And then remember the following Monday for the people who aren't in the U.S. is Memorial Day. So that's why you see nothing. So next weekend goes into a 3-day weekend. All right. Today it was sort of back and forth. You had the market pulling back with debt ceiling fears that there won't be a deal. Adobe was really on a tear today. Tesla slightly up, but Amazon, Nike getting hammered, banks pulling back. So Cisco bouncing back again. In terms of your sectors, consumer cyclicals and communication services, we're pulling back in healthcare and energy, so you can see it was a rotation into some more secure things, especially in the healthcare. Fed watch pulling back after Powell. Remember, at this peak, it was closer to 40%. Now it's 22%. So leaning towards pause, but this will really change depending on PCE Friday. So it'll be interesting to see how it moves in relation to that. Fear and greed, still in greed. And that's where, let's just see where the PE ratio finished up the week, 24.27. Little pullback. Still, I was watching. See, I go back to what I said this morning. If we do pull back, remember all those call options, the 4200s. There's not a lot of put options there. There's a lot of call options there. We got 22 minutes. It's trading 41.98. So, yeah, I did see that, Charles. Thank you for bringing that up. Foot Locker had terrible results. Sneakerheads are spending less. Well, a lot of the consumer is spending less. I'm starting to see more stuff like places I'll go if I'm out grab some lunch or something. You know, they're starting to, for a while there were no deals, no coupons, no nothing, and now it's starting every day. There's something popping up with a discount, and that hasn't happened for a long time. So they're trying to attract more business. I think people are starting to cut back. So that's where we sit. Little pullback, but still above the major breakout level. Still above the major breakout level. You can see the breakout level right here, and that's right around today's low. So cycles on the daily getting back to the top area, and on the weekly still headed lower, but so far theoretically it's still a sideways correction even though it made a new high. We'll just have to see going into next week. NASDAQ, finally a pullback with very overbought cycles at the top on the daily, cycles getting back to the top on the weekly. So if we could see some fireworks towards the end of next week. The Dow roughly closing to where it did on this 2 days ago on the 17th, but the double bottom still in play with daily cycles now back at the top, and you know that'll be interesting to see if that can really push lower, and weekly cycles still heading down. Russell pulling back, but still above this key support base, so it's going to be watching that for next week. VIX, a little bounce up, not much to talk about there. The DAX still after that breakout move, still chugging right along. Notes, again, close. It bounced back a little during Powell and then rolled back over again, but still holding the 37.5. I'm really watching this, especially if PCE comes in hot for at least to target this 112.17. You can see the yield clearly still a follow-through breakout. And even with slightly dovish Powell, still the yields are climbing. What the 10-2s end up? Let me get to the 10-2s. 10-2s still holding the key support, but it'll be interesting to see if that breaks again lower next week. What else do we have? I know Pep's in here. We'll get to gold in a second. Dollar index, overbought, cycles at the top. So now we're going to see what kind of correction, whether we get a sideways or pullback. The only thing that really ruins this potential up move for me is that back below, close roughly back below 102. But I'd start getting nervous from the bullish sense if we got back below about 102.25. But any pullback to that is a completely normal pullback to the breakout zone, this little breakout zone and the rising rotation zone. Crude, not much at all today, just a back and forth day. Gold, here you go, pal. It'll bounce back to the breakdown area with cycles at the bottom coming out of sold conditions. So it'll be interesting to see how strong gold can be. Again, with the dollar pullback, you might be able to get a little more of a bounce in gold. But I'm still going to be watching for that next rollover play, especially since, all right, silver bounced back a little today, but I'm watching for silver to easily complete the double. And that's the path. And as silver does that, I'm expecting a little more pullback in gold after a slight possible bounce. Yen got the pullback today, holding on to the breakout zone. Euro, slight little bounce, not even back to the this other breakdown zone or the daily rotation zone, but cycles at the bottom and oversold, so going to be watching. A number of markets are due a bounce. We could get a bounce early next week. Some still, like the euro gets a bounce, the pound gets a bounce, the yen pulls back, gold gets a bounce, silver continues to get a bounce, and then towards maybe the end of the week, another rollover play potentially. And we still have the debt ceiling stuff up in the air. Bitcoin, nothing. Tesla, I just widened this flagging channel. So closing the one gap back from April 19th. But does this change anything with the long term? No. We're getting back maybe another week to get cycles to the top, possibly, before the rollover play. Remember, on a big weekly double top pattern, it can take many weeks to play out. So we had the downwards 5, 1, 2, 3, 4, 5. Now we're getting 1, 2, 3 weeks back up, getting cycles back to the top. So I'll be watching for another rollover play, just nothing yet. Oh, these people love to hear themselves talk. Would I consider a monthly and mid-month Sunday stream? We'll see. We will see. Yeah, I did see that. She said that earlier. More bank mergers may be necessary. What, you're going to take your too big to fail banks and have them keep soaking up the banks that you've deemed are screwed. There we go. Look, the market's still in major bullish mode. Because you can see, yes, the talks fell apart. No vote on Sunday. And it didn't pull back that much. So the bad news was easily absorbed by the market. So that's my opinion. And at some point this debt thing will get resolved. And guess what? When they go to do the TGA and a bunch of issuance for that, that's going to suck some liquidity out of the market. Until then, we'll see. It's in trailing mode from my perspective. Powell's not really playing with liquidity. You have a lot of liquidity also because they're draining the TGA. So that's been adding tons of liquidity over the last few months to the markets. And once you have to refill the general account, you're going to have to issue a bunch of instruments to refill that, which is going to suck up some liquidity. What else? Hey, Daniel. Hey, George. I didn't know if I said hey to you. There's still not a ton of great the best setups in my mind are still gold after a slight bounce play, watching for a rollover. Silver to the downside. Got a little bounce. Well, here's an example of, this is another example of a sideways correction. Copper. Sort of a diamond formation sideways correction. Don't talk a lot about diamond formations, but that is a nice diamond formation. I lump it in the sideways correction. So, came down. You see here, oversold, and so far moving roughly sideways to get cycles back to the top. So that'll be interesting for another potential breakdown play with copper. Do I see further pullback on Monday? Actually, I could see a further, still a continued bounce in the euro, bouncing in gold. NASDAQ, I think the market's going to either remain in choppy to bullish mode. And I don't see the Fed speak on Monday unless they say something off. I think it'll quiet down, and then going into Thursday, Friday, you'll have the fireworks begin. So right now, if you're trying to ask me to predict Monday, look, I'm in choppy to slight bullish mode until things really start rolling over. If we start pulling back, any pullback even to 13,650 is just back to the daily rotation zone. You have to do some major damage. In the S&P, look, it's still holding a breakout zone. Even if we get below there, you still have a lot of key support at 4160. That wouldn't do a lot of technical damage. I think it'll be choppier still with a bullish potential bias going into midweek. Choppy to bullish, if you have to ask my opinion. The NASDAQ could see a bit more pullback because it's way overdone. The double the double did trigger in Intel on the daily basis also. So that did trigger. In other news, AMD inside day. There's your pullback in AMD. Nvidia inside day. See, this is what I'm talking about. You got a 1 day inside day pause. It couldn't even track something bigger than that. So does that mean it can't still pull back more? But this was not a big pullback in stocks that have rocketed. And I just don't really see anything that is going to rock the markets before at least Thursday. Nvidia to 400. I guess it's possible. I mean, that would be... Anything's possible in this crazy market again. Would I be counting on Nvidia hitting 400? No. Hey, it's closing 180 P to E. Boy, when this thing rolls over, it's going to be bloody with a lot of people. All right. That's really about it. There's not much else to talk about. So, earnings for next week. Speaking of Nvidia. So, not much Monday morning we got to worry about. After the close, you got Zoom, which isn't so much of a big thing anymore. Tuesday, remember Home Depot's earnings were not good and their guidance was not good. Lowe's is on Tuesday morning. And we got AutoZone. Those are the two biggies I'll be watching. From a higher end consumer, I'm going to keep an eye on Williams-Sonoma. After the close, we got Palo Alto Networks, Intuit, Allegiant Technologies, Toll Brothers. Then Wednesday, not much. But after the close Wednesday, for all you Nvidia fans, there you go. Nvidia, Snowflake, not one I really follow, but a lot of people do. What else? Thursday, Best Buy, Dollar Tree. That's, it'll be really, again, interesting to see. Now, you're going to have unemployment and GDP numbers trump what they do, but is the consumer starting to roll over? Well, we'll see. If Dollar Tree's strong and Best Buy's a little weaker, maybe. And Costco is going to be very telling after the close on Thursday. Autodesk is another one. And Friday's just a very quiet day. So winding down earnings season, but we got some big names this week. So there you go. What's the best way to make consistent money from trading? A, always manage risk and reward. Keep your losses in line by using position size. Don't take outside losses, and since you don't know, for any given setup, like I'll just use it since I talk about doubles all the time. I don't know which doubles on a market are going to work or a stock are going to work and what aren't. So I'm not going to take, let's say I'm risking $1,000 per trade. I'm going to risk whether it's Apple or whether it's Intel or whether it's whatever, AutoZone. I'm not going to, I'm going to risk 10,000 on Apple and Intel I'll risk 1,000. No, because then you can take an oversized loss. You don't know. You got to align yourself with probabilities, and you always have to manage risk first, which also takes into account reward. So learn whatever. I don't care what setups anybody learns. Learn them, test them out, vet the probabilities, That's why I also teach targets, because then you can at least set up an initial reward to risk. Doesn't mean you have to, take it all off that first target, or you can just even use it to raise a stop, but you'll get an idea of where your reward to risks are so you can let stuff run. Those are my first biggest tips. And then be consistent. That's why I like patterns, because I don't. Oh, I think this is going up. That's not a viable trade method for a bunch of people. And don't chase reward. Don't chase these pump groups, the Discord groups. You know what? You might hit a couple, but longer term, most people will end up blowing themselves up from that. And do be consistent. Have a trading plan and a trading journal. And consistency is key. It's a tough. Longer term trading is a lot easier than day trading. Why? Because longer term gives you longer price action. You generally have wider stops, has more of a chance for the longer term trends to kick in. Day trading is a rough career until you're good at it. Oh, you have a great weekend too, Daniel. Thanks, Anissa. You're welcome, Charles. Hey, Coco, you have a great weekend too. And with that, I will see everybody next week. Bye for now.